Well, we know going back to 1930 that dividends have accounted for 41% of the total return of the S&P 500 index. Dividends are critical. And just to follow up on Steve's earlier comments, we believe in all likelihood that the Fed will announce on Wednesday that they are going to pick up the pace of their tapering and perhaps purchase 25 billion less of bonds per month as opposed to just 15 billion less of bonds per month, which means, Kelly, that tapering would likely be done by the end of the first quarter of next year, as opposed to the end of the second quarter of next year. And then, with the updated dot plot, perhaps suggests that there will be two rate hikes of 25 basis points next year as opposed to one. So, yes, we're in a rising rate environment looking ahead, but rates are going to stay at historic lows for at least the next couple of years. So that makes dividend-paying equities more attractive.
Yeah, I mean, I guess very simply put, the higher that rates are means the higher you're likely to find yield in some kind of bond-like instruments, and therefore the less pressing need there is for dividend-paying stocks. So, I mean, the nice thing about dividend-paying stocks, you're supposed to kind of get some stock appreciation and a yield. Do you think they'll continue to outcompete other alternatives?
I do. And I think this growth to value rotation, which really hasn't taken place thus far in 2021, will start to pick up momentum in 2022 as investors will remain challenged to find pockets of attractive income-oriented opportunities. And then if you layer in, as you suggested, Kelly, the price potential of investing in stocks, along with the income potential of dividend-paying stocks, we believe that presents a pretty powerful investment combination.
And obviously, there's different ways of investing in dividend-paying stocks. You could do an ETF like the one I mentioned. There's plenty of mutual funds with that. You also have some specific names here, and I don't know which strategy, probably your own, my guess is the way you'd recommend most people play this. But
absolutely.
Yes, Cisco, Cummins, and AbbVie. Why did those three in particular jump out?
Absolutely. And all three of those names were in the most recent series of our Morningstar Dividend Yield Select Trust. So there's a technology name, there's an industrial names there, and there's also a healthcare name. All three of those companies have yields, trailing 12-month yields above 2.5%. All of them have dividend payout ratios below 60% and are trading at reasonable PE valuations. And if you consider AbbVie, a biotech name that actually is involved in immunology and oncology, they've had double-digit dividend growth over the last 1, 3, and 5 years. So strong names, large cap value names that can provide you with an attractive level of dividend.
So, Kevin, let's talk about some of the outside probabilities here. If consensus is currently maybe a couple of rate hikes next year, what happens if we get a few months into this and we're talking about the need to do a lot more than that? Or if the spread of a variant means all of a sudden the Fed backs away? You know, what would you say to a client about what those different outcomes could mean for the performance of dividend stocks?
Absolutely. And I can't predict the future of COVID-19. As it stands right now, we believe that Omicron, while it's more contagious, it seems as though the symptoms are less severe and the vaccine makers remain confident about being able to combat this variant. However, if in fact inflation does start to get hot again, we think inflationary pressures remain, albeit not at the same levels as we saw this year. We believe the economy continues to grow, albeit not at the same levels of this year. So that type of outlook provides the Fed an opportunity to start to remove accommodations, but still that should be a conducive environment for both economic growth and stock growth potential. So dividend-paying equities, again, can provide you with income and growth potential, but look for strong companies with strong balance sheet and a history of dividend growth.